Good day everyone, Viet here and welcome to my weekly Forex Outlook. I had a particularly busy week of trading and at one point there were 3 potential trades happening at the same time. First trade was New Zealand USD long on daily chart. Last week I mentioned that a pullback to 0.6620 support will be the scenario that I want to see before considering the trade. Monday's daily candle ticked every box on my list. I went long at 0.6640 shortly after the new candle begins, and the trade was done on Tuesday afternoon. This pair continued onwards and actually reached the next resistance level at 0.6860 on Wednesday. This resistance level was last in play in 2010, so I want to see more evidence from price action to confirm its validity. My second trade is Australian USD long. The setup was taken on 4-hour chart when price action showed evidence of a transition of control from sellers to buyers. Entry criteria was met on the completion of this candle here. The plan for this trade is to eliminate risk as soon as possible and allow the trade to run further if that is the case. Sellers were strong on Friday and now price is only 19 pips from the stop loss, so Monday could see the end of this trade. If support is tested again, then I will once again look for opportunities to go long. My anticipations for several other pairs also came true, but it was not possible to trade them. Let's take a quick look. Australian dollar Japanese yen on 4-hour chart had a similar pullback to support like the Australian dollar USD trade. The decision to stay out of this trade came down to one single criteria, which this setup did not meet. On daily chart, my analysis shows that buyers have not shown enough power as support, so the plan is to stay aside for now. If 89.30 weekly resistance is tested next week, then I will be looking for opportunities to short from there. The Euro USD on daily chart. Price reached resistance at 1.1470. On the 4-hour chart, there was a reversal setup when this candle formed. However, the setup was invalidated on the completion of the next candle. I switched to the 8-hour time frame but could not see anything that meets entry criteria. The reality of trading is that a correct prediction does not automatically translate into a profitable trade. Next is Euro Japanese yen on daily chart. Monday gave us a bearish indecision candle, but again the setup did not have everything that I look for in a trade setup. Looking back at the setup now, I can say that even if the trade was taken, it would have been closed out at the completion of Tuesday's daily candle for a very small loss. I have a very strict risk management protocol which allows me to catch the exact scenario that I know is profitable. Everything else is discarded very quickly and I simply move on to the next setup. The pound Australian dollar on daily chart. Last week I said that although price closed below 2.0880 support, I would take extreme care to go short because last time price hit this support level, buyers took control convincingly. After seeing Monday's daily candle, my trading plan told me to stay out of the short trade. What happened next was almost a mirror image of what has happened in July. Buyers took control for 2 days straight and drove price up almost 500 pips. If price reaches 2.1420 resistance next week, then I will be looking for opportunities to short. USD Canadian dollar on daily chart. Price pulled back to 1.3050 resistance as I had anticipated and closed just below it. This happened on the same day that AUDJPY pulled back to support. At the time, I have already taken the New Zealand USD long and AUDJPY was very close to be meeting all of my entry criteria. If I also take this short trade here, then essentially I'm short on the US dollar on all 3 trades, and this triggered my currency exposure limit. I really do mean it when I say that my trading style is very heavily focused on risk management. The limit can only accommodate one more short trade on USD, So it came down to which setup has the most favorable price action on 4 hour. This pair lost out on that comparison, so the setup had to be skipped. It turned out to be the wrong decision because this trade easily reached its targets in 2 days. Once again, I present to you the reality of trading, where rules designed to keep you safe can unintentionally lead to less profitable outcomes. My trading plan for this pair remains the same from last week. I will look for signs of strong buying power if price gets to 1.2800 weekly support level. Last but not least is New Zealand Japanese yen on daily chart. Price hit 80.70 weekly resistance and had a small bounce off it before continuing upwards. There was nothing on the smaller time frame that would have given me a short trade to benefit from this small bounce. On the 4-hour chart, it looks like a pullback to support has already happened on Friday and price has begun to climb upwards. The next resistance level up is 83.50, and if price gets there next week, I will be looking for signs of a reversal. News calendar for next week. The items that have my attention are the two interest rate decisions. Interest rate decision for Canada on Wednesday and for the Euro on Thursday. Thank you for watching my video. On Friday, I uploaded a video answering some questions, so check it out if you are still waiting for a reply from me. I wish you a profitable trading week. Bye for now.